Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So I had a great question in the comments, which I'm going to read off. It's multi-purposed and I want to read it off and answer as I go along. So a question is, what is your motivation for doing real estate, especially during the times when you're dealing with a lot of overhead work? Also, did you have any issues of managing your cash, since I understand that while properties appreciate and you have rent, you collect, a lot of the money is locked in appreciation, and thus you might not actually have that much cash available for earning rent. So that's a great question. So let me answer the first one. So how do I deal with a lot of the overhead work? So the busiest time in buying real estate, from my experience, is when you're trying to actively find a deal. So I'm setting up my direct mail campaign. Leads will call me. I need to nurture these leads, talk to them, get the T12, get the rent roll. Once I get that and I get understanding, I send that to my lender. So I'm sending it to multiple lenders. So I send the T12 and the rent roll to like 3 or 4 or 5 different lenders that I work with in Oklahoma. And then from there, I talk to them. And, some may write it off, some may talk about it. And from there, once you kind of know your options, at that point, you submit your offer. So once the offer is submitted, it's a lot of work, right? You have to go under due diligence, do the contract, physical due diligence, ask for documents. The lenders will ask for documents, and assuming everything is great and there's no additional negotiations, you close escrow, you take over the property. You get to work with your property manager, your general contractor. So there's just a lot of steps that go into it. So that's the busiest time, when I'm actively finding a deal, as well as when I'm like getting the deal and then basically bringing it to the table. And then once it's managing it, it's not as bad, right? So the hardest part, I would say, is honestly just getting the leads and then sending it to my lender. Like today, for the 14 unit and 5 unit that I'm trying to make an offer on, I just send it to multiple lenders, and make a video talking about that. But this is the most time consuming part, because if it's a lender that I already worked with, it's easy. They know me, they know my track record, they kind of have my profile. If it's a brand new lender, like a new community bank, you're starting over, you get to share your experience, share your vision, and share what you want to do. And you want to know your options, right? And that's the most time consuming part. And then once you get the offer on the table, you have to explain your offer to the seller and then do your due diligence. You get your inspections, you get your contractor out there to see what renovations are needed. Is your roof okay? Is the plumbing okay? Is electrical okay? And you can negotiate seller credits depending on what you see. You get your insurance. So there's just so many different steps in buying multifamily real estate. So it's not for the faint of heart. So like for me, when I know I'm actively buying a deal, I want to make sure that like nothing else is major going on in my life, right? Like I'm not changing jobs, I'm not moving. I just want something very stable so I can focus on my real estate. But for me, because I own 52 units now, 2 apartment complexes, I had a mobile park that I sold. I'm kind of used to it, and I'm very systematized, right? Like I have my lenders that I'll copy and paste this email to send to all of them. I have my property manager there who actually brought me the deal, so I don't have to deal with that. I have a contractor there that I worked with, and he can give me quotes. So for me, it's systematized, so it's easier. But the first time it took me, like, I would say it was a part-time job, right? Like I would work my 40 hours a week, my W-2, and then I'd spend at least 20 hours a week just getting deals to lenders, talking to owners. And now it gets easier and easier as I get more experience. So I will say, as someone new, expect to commit a part-time, at least 20 hours a week dedicated towards getting your deal, making offers, and talking to lenders and property managers and whatnot. So, but once you're more experienced, like maybe me, maybe it's a little bit less time, but it's still very time consuming, right? Like it still probably takes me 15 hours or 10 to 15 hours now that I have a team there and I'm established. I know the area, I know the market, like I know what the rent should be. So it's pretty easy. So like I said, it's just a sacrifice you have to make, right? Like, you have to respond to emails at all times. Like maybe before you go to work, after you come back from work, you're drafting emails. My properties are in the East Coast. So when I'm driving to work for that first hour, I'm talking to my property manager. If I have a break, if I have a lunch break, I'm texting my property managers about the deals and trying to talk to people. So like, for example, today on my drive to work, I was talking to the lender and trying to find out how the deal looked and how it would pencil out. Right, and they know my investment strategy, and I know that how they're going to finance it. So that's how I kind of did that for overhead work. So I'd say in the beginning it's a lot of overhead work, but once you have the property, once you're starting to renovate it, I probably touch base with them maybe like phone call wise, maybe 1 hour a week. but I would constantly be texting them, emailing them, and coordinating with them. So it just requires freaking communication. But the hardest is up front, right? When you're trying to find a deal, trying to bring it to close. So that answers part one. So part two is how do I manage my cash? And a lot of the money is stuck in depreciation, and you're kind of, your cash flow is there, but in reality, it's just there for, repairs and maintenance. So basically asset rich, cash poor. So for me, if you follow my story, I basically bought 80 units in 8 months. And I bought a 26 unit, which I still own, a 20 unit, which I still own in my mobile home park, which I sold for a loss. I have videos talking about all of those, but I basically bought 3 value-add deals simultaneously. And I'll be honest, it gets like you're renovating. I was renovating my 26 unit. I was renovating my 20 unit. I was renovating my mobile home park. And honestly, I cashed out refinance $1.2 million out to basically buy those 3 deals, including the renovation cost. And when you're managing that many deals and money, like you lose track of things, right? Like because for me, I'm focused on like 10, 50, 20, 30, $50,000 decisions that I drop the ball on $1,000 decisions, right? And $100 decisions. So that's how it happens, right? Like when I was done focusing on the $10,000 decisions and that was all cleared up, I then saw, wait a second, I'm like wasting like $5,000 a year on insurance. So that at that point, I revalued my insurance. And then when I finished my $1,000 issues, I focused on $100 issues. Like, wait a second, like why am I not raising my rent on a tenant that's been there for a while? That could cost me, maybe I can raise the rent by like $15 a month, but over the year it adds up, right? So like when you're focused on like I said, when you're focused on $10,000 money issues, you're gonna lose track of $1,000 issues. So you're gonna be losing $1,000, and then I did multiple times, right? Like for example, like I job hopped and I wasn't I was paying for 2 insurances. I was paying through Covered California $300 a month. I didn't even notice it, and I had my work insurance, which I was paying as well. So I because I was focused on $10,000 items, I was neglecting $100 items, right? So this is very common. Unfortunately, I hate to say it, because I'm working full time, which is a full-time job, and I'm doing value-add real estate for 80 units. Managing 3 different property managers, 3 different general contractors, and you're gonna drop the ball on things, right? Like I might have late fees, I might have whatnot. So that's why you try to systematize and automate things as much as possible. So, unfortunately, during that time, you're gonna make some dumb mistakes, but as you get better and more experienced, and for me now, I probably wouldn't do 80 units simultaneously or 3 deals simultaneously like that. I would just do 1 deal at a time, so I can watch the property like a hawk, and that I can manage my expenses. So I can focus on the $10,000 task, but also manage the $1,000 or $100 items, right? Now that I'm more experienced, right? Or you can have a team, but you have to pay that team member, and you have to manage that team member. So, during that time, that's why I said I'm making $1,000 mistake, $10,000 mistakes, right? Like I spent like $30,000 on my insurance when now it's $10,000. So I lost $20,000 because I was too focused on renovations, because my problems were $50,000 problems, right? So that's how it goes down and flows. So the kind of part 2 of this question is, as you scale your real estate portfolio, you basically start to become asset rich, cash poor. And like that's become for me, right? Like I own a lot of real estate. I have $5 million worth of appreciation in real estate. And I do cash flow $10,000 a month, but in reality, I just keep that $10,000 a month into a separate account, so that's there in case there's a major repair. So like I cannot live off this $10,000 a month yet, right? So for me, yes, I'm cash flowing $10,000 a month, but it really is just a reserve fund for future repairs, and a reserve fund if I want to buy more real estate. So if a roof breaks, I can pull $30,000 to cover that. If I have an HVAC issue that costs $5,000, I can cover that without being stressed about dipping into my W-2 income. So, as I become more asset rich, more appreciation, equity rich, and cash poor, because I'm saving that cash for a rainy day, what I've come to realize is that if I really want to cash in my real estate, I have to sell a property, right? I have to sell a property, take that equity, and then with that equity, I could, pay off this house, my primary residence, in which it would alleviate me of my mortgage of $5,500 a month, right? So, yes, I could take the cash flow to cover this mortgage, but in reality, that cash flow is just saved aside. So that's what I learned about real estate is, eventually you want to cash out some of that equity, some of that appreciation, sell it to then pay off your primary residence. And then once your basic expenses are removed, at that point, I could focus on buying more and more assets, right? So that's what I mean. Like I went through a phase of building where I built a lot of assets, I leveraged, I built, I scaled. But now I'm at the point of stabilization. And during stabilization, that's when you might have to sell to take off some expenses off the table, right? Take some chips off the table, if you will. Like I have $5 million of equity. I can maybe sell, a property or two, take that $800,000 of equity after tax and pay off my primary residence. So I took some chips off the table, and then I still have investment properties, right? And then at that point, now that my foundation is more stable, stronger, I can scale even higher, right? So that's the beauty of real estate. So that's kind of the phase that I'm at right now. So yes, you are cash poor, asset rich, but once you offload an asset, or if I can build up my mentorship, my coaching, my real estate brokerage business high enough that I can make more cash flow, I don't need to sell a property. I can just use that money to pay off my primary residence, right? So those are my two options. So right now I'm focused on building up my other side businesses to hopefully give me more income. So hopefully I don't have to sell real estate, but I can always just sell one of my properties and then use that to pay off my primary residence, wipe off my biggest expense, and be less stressed, right? And that's the route I'm leaning towards, unless YouTube blows up or unless my coaching mentorship just blows up all of a sudden, right? So hopefully this answers your question. Let me know if you have any further questions. But if you're interested in buying multifamily real estate, it's very hard. It's very intimidating the first time. With some guidance and mentorship, check out my mentorship program, link down below. If you want to join my school community of multifamily investors, check out the link down below as well. Please shoot me an email if you're interested in a discount code. Otherwise, please like, comment, subscribe, and share this video with someone else. Thank you so much.